Hi guys, good morning and welcome to this Money Control live stream. It's a Thursday morning and the cues coming out of global markets aren't looking all that great. But we'll be talking about that and a whole host of other cues and stocks to watch out for. I'm Nandita Khemka, and over the next 40 to 45 minutes, we'll be talking about a whole host of stocks, cues for trade, and how you should be navigating this leg of the rally. We'll be posing that question to our guest, fundamental guest who will be joining in at 9:30 a.m. But of course, looking at the global cues this morning, not looking all that great because the Wall Street rally has taken a pause ahead of the Thanksgiving holiday, and Asian markets also looking a little wobbly. You have the Bank of Korea that has cut interest rates by 25 basis points, but all these cues, and you of course also have US economic data to digest. Mixed cues, but GIFT Nifty hinting at a mildly higher start for our markets. 24,350. We have been speaking about this level, and a close above this level will be crucial to watch out for. Today being the FNO expiry, we want to see whether we can finally break out of the 24,100 to 24,350 range. So yes, a crucial day, but mind you, we are also 1,000 points off the lows that we saw in mid-November. So it's not going to be such a bad series after all, even though we've seen a 10% correction from highs. But of course, before we dive into all the stocks and all your stock related queries, let's take a look at the top headlines at this hour. Wall Street rally stalls ahead of Thanksgiving holiday. The US GDP grows 2.8% year on year in the third quarter. Fed's preferred inflation gauge, US personal consumption expenditure index, also rises in line with expectations. Asian markets open mixed following a weak handover from Wall Street. The Nikkei and Kospi were trending lower in early trade. Of course, as I mentioned, Bank of Korea has cut interest rates by 25 basis points, and the GIFT Nifty suggesting a mildly higher start for our markets. In the commodities market, oil prices remain steady with Brent trading around that $72 a barrel mark ahead of Sunday's OPEC meeting. Meanwhile, gold is off weekly lows supported by a weaker dollar and the prospect of increased US trade tariffs stirring up geopolitical tensions. And Maharashtra's caretaker Chief Minister Eknath Shinde promises to support the decision taken by Prime Minister Modi and Home Minister Amit Shah on the next Chief Minister. Meanwhile, Hemant Soren is also set to take oath as the Chief Minister of Jharkhand for his fourth stint as the Chief Minister. Well, looking at the cues for trade then, yesterday was a good day because the bulls popped up in the middle of the day. Of course, it was led by a recovery or a strong recovery in the Adani group of stocks post a clarification coming in from Adani Green. The Nifty, spurted to 3-week highs, and of course, aside of Adani Group, what contributed most to Nifty's gain was HDFC Bank. The shares have hit a record high, cleared that 1800 mark as well. And the Nifty Bank index was also in fine fettle, gained somewhere around 100 points or so, and ended above that 52,300 mark. As I was mentioning, Adani Group stocks saw buying in interest on clarification of no FCPA charges against Gautam Adani and his nephew Sagar Adani. All the Adani Group stocks ended up with healthy gains, some of them rising as much as 20%. And of course, we continue to see buying in defense PSU names. Other stocks that were doing well yesterday was Ola Electric. That stock, in fact, hit upper circuit 20%. After Citi initiated a buy coverage, post its new launches. Of course, as I was mentioning, HDFC Bank was at a record high and among top Nifty gainers for the week as well. In terms of options cues, the Nifty put call ratio rose to 1.12 vis-a-vis 1.04 in the previous session. No stocks in FNO Bank for a second day on the trot. And of course, FII buying continues for a third straight session, although they've bought just about 8 crores in the cash markets yesterday. But markets will take heart from the fact that, they emerged as net buyers for a third straight session. DIIs were also, or domestic investors rather, were also net buyers to the tune of 1,300 crore rupees in the cash market. So both DIIs and FIIs emerging as buyers in yesterday's session. So markets will be taking heart from that fact as well. But on that note, let me get on board our guest for today. Joining me is Chandan Taparia of Motilal Oswal. Chandan, great to have you on the show. We've seen a good reversal, a sharp reversal on the Nifty, after 10% correction. We are 1,000 points off the lows that we saw in mid-November, and that's of course thanks to the Maharashtra poll verdict. But 24,100 to 24,350, that's largely been the range that we have been stuck in. And of course today's expiry. 24,350, do you think we have the mettle to cross that level in today's session?
Good morning. Thanks for having me. So yes, we have seen a decent recovery in the market in last 3-4 trading session, and before that index corrected by more than 3,000 points from 26,277 to all the way till 23,263 marks. The index has been consolidating in a range from last 3 days with hurdle at 50-day exponential moving average. So it requires a decisive breakout about 24,350 zone, which it has been trying from last 3 days. But as of now, the way supports are shifting higher, there's the high probability that index can surpass those levels to commence the next leg of rally. So as of now, till Nifty holds above 24,000, bias could remain positive to extend this recovery towards 24,444 and 24,750 level. Those who are looking for immediate point of view, they can look at support at 24,100 to play the swing towards 24,444 or even higher levels. So expecting some more recovery, because on the weekly scale, index has negated its lower top, lower bottom after the corrective 10 weeks. So because of that, some support-based buying could be there. And the good part is that FI is now not selling from last 2 days. In fact, they are slightly buying. So there is some other extra, some positive sentiment for the market. The good part is that Bank Nifty is holding well, and HDFC Bank and a couple of more heavyweight stocks are supporting the index. So till it holds about 24,000, we look for some recovery, and for intraday point of view, look at support at 24,100 zone.
What about the Bank Nifty being supported by HDFC Bank, which has finally managed to clear that 1800 mark, in fact at 52-week highs now, and the Bank Nifty also staged a good recovery yesterday along with the Nifty, 52,300 there. Anything that you'll be watching out for on the upside for both the Nifty Bank Index and HDFC Bank?
Yeah, Nandita, we have a slight positive on HDFC Bank. Stock has entered into the lifetime high territory. So first, to talk about HDFC Bank, it has given a consolidation breakout of last 21 weeks and holding well above 1800 zone. Earlier in last 20 weeks, 2 times it made an attempt to surpass 1800 zone. But now we have given a close and holding well above the same. In fact, looking at the derivatives data setup, some short covering could be there led by call unwinding and the put writing. So HDFC Bank has potential to extend the move towards 1850 to 1880 with support of 1770 level. And if HDFC Bank moves well, then there will be support to Bank Nifty as well. And looking at the Bank Nifty, it has been consolidating in a range from last 37 trading session in between 52,000 to 52,500. Now we are near to the exact upper band of the trading range, but supports are shifting higher. So now till it holds above 52,000, your Bank Nifty can head towards 52,750 to 53,000 zone.
Okay, that's the view then on the Nifty Bank Index. Positive views coming in on HDFC Bank, also 1850 kind of levels to watch out for. But let me get in your thoughts on the realty stocks. Couple of them in focus today. Of course, Prestige was in focus yesterday. It got a downgrade from Morgan Stanley, and they had cut the target price to somewhere around 1,510, citing slowdown in pre-sales momentum. Stock is at 1640 or in that zone right now. Your thoughts on where the charts are headed, because after a good run over the last 6 months, the gains have been tempered, so to say. On the other hand, you have Godrej Properties QIP that has kicked off, and there are some details about how much it plans to raise, and the indicative price as well, which is at a discount of 5% to the floor price of 2,727. On both the counters, your thoughts, which one is poised better on the charts, and if you have to take a bet, which one would you choose?
So in real estate counter, we witnessed some recovery, but again, follow-up is missing at higher levels from last 2 trading sessions. To start with Godrej Property first, the stock witnessed recovery from 2550 to 3,000 marks, but again negated its higher highs, higher lows on the lower time frame and drifted lower. So I believe again some profit booking could be there towards 2750 to 2700 zone. So we need to wait and watch for some stability in this counter. If you look at the Prestige and other name, I think mixed cues are there. We witnessed recovery, but follow-up is missing. and most of these stocks are finding hurdle at its key moving averages. Even if you talk about DLF, the stock has been consolidating. Comparatively, is holding well, but multiple hurdle are clearly visible at 835, 838 zone. So most of these stocks are finding tough. We require the decisive hold. Then only we can look for fresh buying interest in real estate counter.
Okay, that's a view on the real estate pack, including Godrej Properties, on which we had a query on our live feed from Debu K. So we have already addressed it, Debu. Hope it answers your query. The next stock that will be in focus today will be Sonata Software. In fact, the stock has been a buzzing one. In the last 5 days, it has gained 18%, surged 18%. And yesterday, there is a news flow around this counter that it has won a multi-million dollar APAC modernization deal in Australia, and the deal will is pertaining to integrating the client's APAC business processes, supply chain across 13 countries. Given the fact that the stock has seen a good run already, but it's still some time away from its 52-week highs, do you think there is room for more upside before it reverses the trend?
So, looking at the Sonata, yes, some more recovery could be there in the counter. In fact, we have positive on the selective IT name, and Nifty IT is holding strongly, and most of the IT stocks are doing well. Even as per the relative rotation graph, your Nifty IT is a sector where strength and momentum both are visible. So I'll go with any IT counter with the view that sector-specific buying is also visible. Now to comment on Sonata Software, stock was in slightly falling mode, was making lower top, lower bottom, but recovery of last 2 days are remarkable with some bullish crossover on the mechanical indicator, and because of that, some more recovery could be there in the stock. So as of now, with support of 605, we are expecting this bounce to extend towards 670 to 685 level.
Okay, that's about Sonata. But since we are talking about IT and we just have a few seconds to go for the markets to open, I want to quickly squeeze in your view on persistent systems. How is this poised on the charts? 5,930 at the current juncture. Where do you see the stock heading?
So major trend is positive. However, on last trading session, it witnessed some profit booking, but buy on decline could continue till it holds above 5750. We will utilize any small decline for an upside target towards 6200 to 6350.
All right, that's the view. Those are the levels to watch out for. There was a query on that, and I hope that answers your query. The next, in fact, forget about the next query. Let's take a look at the markets right now. First ticks coming in, and as the GIFT Nifty was hinting, we have witnessed a mildly higher start for our markets around that 24,300 zone. Haven't really cleared that decisively. Early days, it's just opened up. So let's see whether 24,350 is at play today or not. But the mid cap index has slipped into the red as we speak. Looks like it is underperforming at the current juncture. Let's see how the texture really pans out as we move ahead. The Nifty Bank index has added another 100 points. So if 52,400 is where it's at the current juncture. Let's see what the other sectors are doing at this point. Metal was one pocket that did well yesterday. Today, flattish start for metals, no big moves, but it is in the positive zone nevertheless. Autos in the red, energy pack is up 0.5%. FMCG continues to do well. I think it has been up for 2 to 3 sessions. In the previous 2 to 3 sessions, and today as well rather, it's trading higher by 0.5% or so. Other sectors, PSU Bank index, yesterday it was in the red. Today marginally higher, but of late PSU stocks have of course once again come back into the limelight after the Mahayuti's victory in Maharashtra elections. So other defense PSUs were doing well yesterday. In fact, BEL was extending its gains. Today as well, Bharat Electronics in the green, and just want to see what BDL is also doing, because these stocks have seen renewed buying interest ever since the Maharashtra poll verdict. In fact, a day before that, Bharat Dynamics as well up 2%. So yes, defense, PSU, shipbuilding names, all of these stocks are in focus. But in terms of the individual movers on the Nifty, let's see which are the ones hogging the limelight. Adani Enterprises, building on the gains that it saw yesterday. It was a double-digit gain by the end of the day. HDFC Life is the other one. HUL among top gainers. Adani Ports, the other one. HDFC Bank 1824 is where it's at. ITC also among gainers. Apollo Hospital, that was a laggard yesterday, is back in the green. Among losers, you have autos that are out of favor this morning. Eicher, M&M, Maruti, Bajaj. All of these names are among the top losers on the index. Infosys also under pressure. Trent, that saw some buying interest yesterday, has once again slipped into the red. Cipla from the pharma pack not doing all that well. So, select IT names, auto names, select pharma names are under pressure this morning. Looking at the open, Chandan, first coming to your recommendations for the day.
So yes, I'll focus on Bank Nifty as HDFC Bank is doing well. So I believe Bank Nifty can do well. It can give the breakout today. So with support of 50 to 100, slightly higher support, we are expecting it to hit 50 to 555 and then fresh leg of rally. Looking at the stock specific idea, HDFC Bank on radar, but on momentum pick, we need to focus on counter like PEL. The stock gave a consolidation breakout on the daily and the weekly chart. Yesterday it witnessed some decline, but supports are intact. So with support of 1170, 1170, one can look for target of almost 1255 levels. So PL will be one name where we are keeping a close track and expecting it to go on higher side. Ashok Leyland could be other name with the view that a positive price pattern is visible. Narrow range breakout already it is seen in the daily chart. So with support of 231, it can head towards 245 level. Positive on the BEL, a major price pattern has been making high tops, high bottom. So with support of 300, we can see an upside move towards 322. So these are the couple of ideas with the strength in the Bank Nifty.
Let's talk about some of the names. A lot of order wins, right? We'll come to KEC International also, but I want to first get in your thoughts on Hudco and NBCC. These companies have signed a memorandum of understanding for development of 10 acres of land parcel in Noida. Both the stocks are buoyant in trade. In fact, Hudco has seen a good up move over the last 5 to 6 sessions as well. How are these two stocks poised? More upside, and NBCC, of course, hovering around that 100 mark. What are the levels you'll be watching out for the next couple of sessions on these two counters?
Yeah, so talking about NBCC, the stock has formed the bottom near 87 and now has been making high tops, high bottom. And I think if manages to hold today, then at 3-digit mark to date, some more momentum led by surpassing falling supply trend line. So with support of 96.50, one can look for an upside target towards 107 marks in NBCC. Looking at Hudco, yes, major negative price has negated. After the weakness of last 20 days, it has formed the double bottom, even the rounding formation. So all these indications are indicating for an up move with support of 225. One can see an upside move towards 245, 250.
Okay, that was about Hudco and NBCC. But another counter that's buzzing and hit a 52-week high is KEC International. It has, of course, bagged an order worth 1,700 crore rupees from Power Grid in transmission and distribution business. Stock has done extremely well over the last 1 month. If you see a 20% up move already, here on 52-week high has been hit, a fresh one. Do you see more upside? Has it already seen the up move, or is it still a breakout stock and heading higher from here?
So to reply on KEC International, major trend is quite positive. Stock has given a breakout. One of the strongest name, even the weekly charts setup indicate further up move. So with support of 1055, look for an upside move towards 1140 in KEC International.
Okay, that was about KEC International. Just want to quickly take up some viewer queries. If you have queries, send them in to us right now. If you want to get them addressed, now is the time, because Chandan is here with us till 9:30. We'll try and address as many as you have. But one query on Adani Green. This one's coming in from Nitin Shaji. Of course, Adani Green and other Adani stocks have been extremely volatile, reacting to news flow. But post the volatility, your take on how one should navigate if they have holdings in Adani Green?
So I'll avoid as of now. The major trend is negative, has been making lower top, lower bottom on the weekly chart. However, it witnessed some recovery in last 2 days, but as of now, the structure is negative. It has corrected from 2100 to 1000. So better avoid. Let's wait and watch for more stability and the safer name in this market scenario.
Okay, that's the view. The next query is on HDFC Bank. Of course, we have already discussed it. But within the PSU banking lot, any preference, Chandan? Because PSU banks have, made a big bang, move since Friday. Of course, last couple of sessions, including today, some bit of a cool off happening. But within the PSU banking pack, would you like SBI's chart or would you prefer something like a Bank of Baroda or a Bank of India for that matter?
So like looking at Bank of Baroda, or I'll go with the Union Bank, and the good part is positive on the bank nifty because of the buying in HDFC Bank and all. So Union Bank I can select. It is from the positive price pattern. So with support of 120, it can head towards 132 kind of levels.
All right, Union Bank, that's the preferred pick from the PSU banking pack. But some queries have started coming in. Want to take up this query from Anune. He wants to know your thoughts. Realty we've already discussed. So what about the hospital sector? Anything that you like from there? Any stock? Apollo Hospital, it was under pressure yesterday. Today it has seen a good rebound. But anything that's catching your eye when it comes to the hospitals and other diagnostic kind of space? Anything that's looking healthy on the charts right now?
So I'll go with the Lotus Lab. Trend setup is positive, and every small decline could be bought with support of 532. It can head to a 570 kind of level. So I'll prefer on Lotus Lab.
All right, Laurus Labs, that's the preferred pick from the entire pharma pack. But I can see a query that has come in on a Tata Motors. This one's coming in from Praveena. Tata Motors, I just want to pull up the charts and see how this stock has fared in the last 5 sessions. Of course, autos have been pretty much, a little volatile, right? There's a lot of news flow about, the festive sales not picking up, and, of course, Vahan data also indicating some bit of pressure for PV and CV sales in particular. But looking at the charts, last 1 month, the stock has shed 10%. Even the last 6-month chart, 6-month returns, aren't positive. So within the auto pack, how would you trade into a Tata Motors? Do you think one should look at other names like M&M at the current juncture and not Tata Motors?
Yeah, so I'll go with other name. Tata Motors has negative structure, has been making lower top, lower bottom from last 13 weeks, corrected from 1142 to almost below 760 marks. So I'll go with the name which are comparatively holding the support zone. So in this scenario, either I can go with Ashok Leyland, which has bottomed out recently, making a high top, high bottom on the daily and the weekly chart, or M&M could be the second ideas with support of almost 2920. It can head to 3120 kind of level. Ashok Leyland with support of 230 can go to 245 kind of level. So I'll prefer Ashok Leyland and M&M over Tata Motors in this market scenario.
Okay, that's the view. Prefer other names in comparison to Tata Motors. The next query is coming in on Vari Energies. Yash Sampath wants to know your thoughts. Looking at the chart pattern, anything that's caught your attention, or do you think you would wait for more data on this one?
Yeah, it's always advisable to wait for more data, but as of now, looking at the structure, the stock has corrected from 3743 to 2500 level, trying to hold 2500 zone from last 2 days. Some recovery could be seen, but not expecting bigger move. Can wait for some bounce back stance in the counter towards 2750.
Okay, that's the view on Vari and energy. But aside of that, we are getting a couple of queries on railway stocks. Vishal Dave wants to know your thoughts on RVNL, whether it's a good time to buy, and I think Alex has written in and wants your thoughts on Concor, whether or not one should take a fresh long. As I was mentioning, PSU stocks are back in favor. But within the PSU pack, all these railway names, is the risk reward attractive there, and should one get into these stocks?
Actually, risk reward ratio is attractive, but the structure needs to be changed. The good part is that most of these stocks are not finding pressure, but concern is follow-up is required. Whether you talk about Concor or RVNL or IRCTC, most of these are having same kind of structure. So if you ask me, I can talk about IRCTC. The stock has recently made bottom near 783, and after that slightly inching upwards. So it needs to hold above 850. Then only the stable bottom could be seen towards 900 to 920.
Okay, that's about the railway stocks. But before we take other queries, I want to get in your thoughts on a Colgate. The company did lay out its plans, yesterday. The stock is up, 3% at the current juncture. 3,100 is where it's at. We have a brokerage view also coming in on Colgate. They have a sell rating. Target price is at 2750, lower than the current price. They've said that the growth strategy of the company has been consistent over the last 12 months, and growth story, of course, has been consistent. But the company is looking at driving per capita consumption for toothpaste by increasing double brushing, and they have made progress on most of the key drivers over the last 12 months. That's what Goldman Sachs is pointing out, and they've also taken note of the fact that several initiatives have been lined up going ahead. Jeffries, on the other hand, a buy call. Price is at 3,570 rupees, and they've also taken the note of the fact that the company is aiming to grow ahead of category and FMCG players, and they are looking at segments beyond oral, and are also focusing on bringing more products from the parent stable as well. But one concern that's been there for most of the FMCG names is the trend that has emerged after the second quarter earnings, that was rather seen in the second quarter earnings, which was a weakening in urban consumption. And Jeffries has also pointed out that flattening rural demand is something which is also a concern. Colgate, the views are pretty divergent here if you look at both the brokerages. Stock is doing well today, 3%. But what view will you go with? Would you be, looking at the stock heading higher from here, or would you say that it is heading lower? Because in the last 5 days, it has seen a good 14% kind of a move.
So, to reply on Colgate, the stock earlier witnessed a sharp decline, especially in the month of October. That time it corrected from 3,900 to 3,000 marks. Even it drifted to 2,750, but recovery in this week is amazing and has been making high tops, high bottoms. So I believe the ongoing bounce could continue. The stock is now finding the V-shaped recovery, or a smiling face is clearly visible on the chart. So with support of 3,000, we are expecting this ongoing move to extend towards 3,250 to 3,300 zone in Colgate.
Okay, 3,200 to 350 zone. That's the expectation on a Colgate. With that, we've come to the end of the query segment. And Chandan, I would like to thank you for taking out time and joining us this morning and sharing your thoughts with us, and of course also helping our viewers navigate their stock holdings as well. Look forward to connecting again, and wishing you a happy trading day ahead.
Thank you. Thank you so much.
Thank you. Well, on that note, let me quickly just take a look at what the markets are doing. We have, flattened out further. In fact, we have slipped into the negative zone at the current juncture, although the mid-cap index has picked up traction and is now up 0.6%. So there has been a reversal of sorts. Large caps have, fallen behind as of now, but let's see how we progress for the day. And of course, it's FNO expiry, monthly FNO expiry. So expect some bit of volatility in today's session as well. But on that note, let me bring on board our next guest for today. Joining me is Feroze Azeez, who's the Deputy CEO at Anand Rathi Wealth. Feroze, great to have you on the show. First of all, you've seen a good recovery from lows, right? From mid-November lows, a 1,000-point recovery, audio, and there's some bit of good news. Can you hear me now?
I'm not able to hear your audio.
All right, we'll just have that fixed first and then come back to you. In terms of the market right now, we are flitting between the green and red zone. The Nifty is back in the green. Sensex, although trading down by 15 to 16 points or thereabouts. In terms of the movers at the current juncture, FMCG stocks are continuing to do well, and they are up for a string of sessions now. HUL, that's the top mover at the current juncture, up 1.5%. ITC also gaining in excess of 1%. Tata Consumer, that stock is also up 1% or so. Aside of that, you have the Adani group of stocks extending gains. Both Adani Enterprises and Adani Ports are among the gainers right now. Some of the banking names like IndusInd Bank, HDFC Bank are extending gains. HDFC Bank, mind you, 1826 is where it's at the current juncture. You have some auto names, although autos are under pressure, Hero Moto is bucking the trend. That's among the gainers. HDFC Life is the other one that's gaining in trade. Among the losers, you have IT names. Top 3 losers on the Nifty are from the IT pack. So Tech Mahindra, Infosys, HCL Tech, these are your top losers on the Nifty. TCS also among the losers, and iShares, M&M, these are some of the other losers. From the financial pack, you have Bajaj Finance, Kotak Bank, these are out of favor, and BEL has snapped out of its winning streak, is among the laggards today, down 1% or so. Let's take a look at some of the other movers then. Reliance Industries, that stock is also down, taking a breather, because this stock has been doing well over the last 1 week or so and providing support or in fact contributing among to the Nifty gains as well. But aside of that, I want to see what the sectoral trend is looking like at the current juncture. As I mentioned, FMCG names are doing well. So FMCG as a pocket is the top gainer right now. Aside of the realty pack, that's also doing well. IT is the top laggard. That index is down over 1%, and autos have pared some of the opening losses but are still in the green. On that note, let me check if we have established a connection with Feroze or not. All right, I think Feroze is back on with us. Hi Feroze, can you hear me?
Hi, how are you? Good morning. Now I can very clearly hear you.
I'm great. All right. Nice to know. So let's talk about the markets. We've seen a good reversal from mid-November lows, right? We are 1,000 points off lows, and there's some bit of good news as well, right? Of course, notwithstanding the Maharashtra poll verdict, which proved to be, the factor that led to this recovery. But FIIs have also turned buyers for the last 3 sessions at least. Would it be too early to call a trend reversal? Because China is not the only threat now. It's money flowing back into the US. That's the bigger threat. So how would you read into the current leg of rally, and what do you make of the kind of reversal or short-term reversal that we have seen in the FII flows?
Yes, so if you look at Maharashtra's election was, to my mind, not a big event. And that's why you see that on 25th, we've seen about a 1%, 1.3% up move on Nifty. And the broader market was almost there. And we've, for the last 3 days, after the Monday, we've been flattish from the levels where we closed on Monday. But the rally on the last Friday, which was about 500, 550 points on Nifty, was a very, very unique rally because of the FI short positions having reached 76, 77%. See, bigger falls. Now, if I backtest this data with respect to regression and also try to do some predictive analytics, FI long short, if crosses 70, you can't have sharp falls. If it crosses 85, you can expect reversals. For small good news, you will see bigger rallies. That's amplified movements you will see on the positive side if the short build-up is 85%. Now, if you look at Monday, 9,200 crores of buying which came from FII. Now, if you tally who sold on the date of election results, retail and others, which is corporates, Indian firms, have sold about 5,000 crores. First time for this year, for this month, DII sold about 4,000 crores. So this 9,200 crores, which FIIs bought, was sold equivalently by Indian participants. That's why I call Maharashtra election not a very, very big event from an Indian sentiment standpoint. Point 3, I think China is definitely was a risk. But if you look at $900 billion, out of which an FII, if it changes, takes away 1% of it, 1.5% of it, it could just be rebalancing. See, when an asset class does well, when we tell clients to rebalance back into debt and equity, why is it not going to be relevant for an FII to rebalance between India and China? If China has underperformed and India has outperformed, you will have to rebalance your weights. And that's 1.5% of the total FII holding. So it doesn't perturb me too much. I think the Trump election result is more of a positive. And I'll give you some data points to substantiate that claim.
Okay, so post the Trump's victory, if there's one Trump trade that I would like urge you to point out, Which one would you choose? Would you choose IT or would you choose chemicals?
See, if you ask me, Nanda, I would say that it's very important to look at trades more microscopically. If you're wanting to trade sectors, I don't think these are very good times to trade themes. You will have to go really bottom up at these valuation levels. You can't be top down. That's my right or wrong assessment. Now, if you really want to play the FII card, you have to go microscopic. And the barometer for that is FIIs in this calendar year have added number of shares to 168 out of 250 shares in the small cap index. The NSE small cap 250 index has 250 naturally, as the name suggests. 168 stocks FIIs have added. There are 17 stocks where they've quadrupled the number of shares they held on 1st of January to 31st of October. So if you go microscopically, if you want to feel participating with the FII, then I would rather go to the 17 stocks where they've quadrupled their holding, and FIIs are very price inelastic. So if they want to add shares, they're not going to be very price sensitive, unlike the domestic institution. As far as my interaction as a listed company goes, so I would say not sectors. If you really want to play the FII card, go bottom up. Find out which are the 17 stocks, and probably I can read them out to you. These are some of the stocks which you can play on the screen subsequently, Nandita, but I think you'll have to go bottom up and not theme wise.
You know, a lot of fund managers I spoke to before the recent leg of up move had said that it's time to keep dry powder. It's time to perhaps take some cash off the table and sit on cash for now. But do you think now is an opportune time to re-enter the market? Would you advise looking at accumulating quality stocks right now, or would you ask investors to wait for a bit and then jump in? Is the stage set for a Santa rally before a pre-budget move in the market?
See, when you hear fund managers, you have to classify yourself and saying that whether this information is relevant to me as an individual or not. If you're speaking about 4-5 year kind of time frames, I would always buy at a level where I'm almost 8-10% lower than the 52-week high of Nifty. If I get any discount of 7-8-10%, I would definitely buy if it's long-term money. What more discounts do you want? Why do you want to go to the shop when the discount sale is last day? You would generally go for good stock on the first day of the discount sale. So 8-10% is always meritorious in an economy like ours to buy that dip if you have 3-4-5 year money, which is whom we deal with. 11,000 clients whom we deal with have intergenerational wealth. So we tell them to buy if you're not at 52-week high. That's point one. Point two, if you're a trader, then there's a lot of barometers. I see short-term 5 barometers which have proved themselves in predictive capability. One thing which people miss out, and I'm very surprised that India has hardly spoken about, a circular which was on 22nd March 2020, a day before the lockdown. There was a circular which limits the number of shots in India. I can't, as an FI, if I don't have long position in India, I can't sell more than 2 lakh futures today. So that's why the volatility of India from that day on till now is lower than S&P 500. S&P 500 is 50% of India's world's market cap, and it has larger volatility. 18.59 is the standard deviation from that day till 31st October for S&P 500, which is a 500 stock, and Nifty, which is a 50 stock, which represents only 2% of the world market cap, has a lower volatility at 18 from that day, because India is not a short conducive market. That's why you don't see sharp drops. Given that kind of a circular, I would be very confident volatilities will remain muted. And I hear so many experts saying volatility is high. What high are we speaking about? You have lesser volatility, 18.59 is S&P 500 and Nifty is 18, and still people without mathematical check say that India is more volatile than S&P 500, which is not the case on an Excel sheet.
Well, that's a very interesting point that you've raised. Although people have said that we've been extremely volatile, you say that it is lesser compared to what we have seen in the US market. You've said that it's time to take a bottom up approach rather than a top down approach, but still I would urge you to share your thoughts on the PSU lot, because although you've said that FII's long short is a much larger point that has led to the recovery that we've seen in the market, but PSU stocks are back in the limelight. We've seen stocks like BEL performing well over the last few sessions, and all the other PSU banks also have seen a good run. So if somebody has to take a bottom up approach, should one look at the PSU lot right now? Is after the correction, is the risk reward attractive there?
Yes, definitely it's attractive there. But you, as a direct equity investor, there's so much analytics one should do. Like we only deal with mutual funds, and we have 17 people only doing research of short term and long term so that we can advise our 11,000 clients. So if you're buying direct equity and PSU, you first have to understand your style and the market dynamics. If you're a growth style investor, I will give you some barometers which you can choose some PSUs. Don't buy all of them. If you buy all of them, then you're over diversified. You will never make money. If you look at mathematics, you can take decisive actions and buy two of them. How do you buy two of them? If the mean valuation, if you're a value investor, make sure that if the mean PE for the last 4 years is X, if it is, and the standard deviation is 4, if it is 3X, 3 sigma more, then I would not buy as a value investor. But as a growth investor, I'll surely buy 2 sigma more than valuation, because I'm going to be only invested for 2-3 months. So you have to first ask yourself whether you value long term or growth short term. If you're growth short term, buy expensive and quit when it reaches 4 sigma valuation limits. That's what I do. And if I've back tested this, you will beat Nifty by about 4-5% handsomely with a lower risk in terms of beta with Nifty.
Right. Last couple of questions, Feroze. In terms of mid cap versus large cap, where do you stand? How much allocation should go towards mid caps now?
This is a question which I might change the answer very swiftly, because we look at some data on a daily basis, which is nothing but the flows in mid cap and small cap yesterday in the funds. So when it comes to mid cap and small cap, it also depends on what were the last 1 week flows. Once the flows start turning downwards, then the differential return which mid caps and small caps have given the last somewhat, which is the number I remember, which is about 20-21% between mid cap and large cap outperformance relative to Nifty. When you look at this barometer, last maybe 20 days, if I'm not wrong, small caps in India, small cap funds have kept giving cash flows positive by net investors. Net cash flow is positive for all small cap funds put together. Not that you're worried only about small cap, but that is the cumulative barometer of the sentiment of an institutional investor. And that's a very important thing. If 10 days, if small cap continuously gives you redemptions, then I would change my stance very quickly, because last 1.5 years, we've been bullish on small cap, mid cap when people dropped their hats in the ring about a year back. So we've been bullish for the last 1.5 years, and we continue to be till we see reversal in the sentiment. And then I will definitely book all my profits from small cap, if not all, a substantive portion of it.
All right. Lastly, in terms of asset allocation, as we step into the new year, would you recommend any particular setup? What if somebody is looking to change their asset allocation within the portfolio? What should they keep in mind now as they step into new year?
Yeah, so the same person could have 2 asset allocations depending on the pot of money he's talking about. If it's first you bifurcate your money into 2 pots, one which I surely not touched for the last 5 years, and there is no requirement of that, then I would say 80-90% in equity. If you have the courage to weather the volatility, and volatility will show you 10-15% drawdowns from the peak every single year. If you can weather that, then you will make at least 13-14% return on your overall portfolio. So I would definitely, even with mutual funds, want to at least double my money every 5 years on the long-term portion. The short-term portion, I think you should go 50-50 if the weighted average goals period is about 2.5 years.
All right. That's the view then from Feroze. Feroze, I'd like to thank you for taking out time this morning and joining us. Always a pleasure chatting with you, and I look forward to more interactions with you in the future.
Likewise.
Thank you. Thanks a lot. Well then, on that note, of course, coming to the end of the show, we are extremely flat at this juncture, but mid caps are showing good traction, up 0.6%. The breadth is also firmly in favor of gainers, 4:1. That's the kind of advanced decline ratio that's there on the NSE. So yes, the broader end of the market is doing well, which is being reflected in the breadth as well. HDFC Bank now up almost 1%. And if you look at the top Nifty gainer, it's the Adani twins, building on the gains that we saw since yesterday. And of course, IT remains under pressure today. Most of the laggards on the index are from the IT pack. Tech Mahindra, Infosys, TCS, all of them witnessing profit booking. But with that, we are completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. But don't forget to come back and join us for Closing Bell at 3:30 p.m. Till then, have a great day and stay tuned to Money Control for all your other news and updates.